let's talk more about the markets and the economy. Keep this conversation going. Bringing in our bulls for the day, James Moffitt, 5-star fund manager at UMB, Scout Investment Advisors, a brave man. And on the bearish side, we have Michael Sheldon, chief market strategist at RDM Financial Group. On call today is Paul Kedrosky, strategist at 10 Management, Asset Management. He's also a CNBC contributor. Gentlemen, thanks so much for joining us. James, let me start with you because Larry's feeling pretty bullish today. What do you think of this market?
Well, I think as long-term investors, this is a great place to be buying stock. We're very optimistic that the financial program is working, that monetary policy will be effective, and so that it isn't going to happen instantly, but this is a good area to be buying stocks.
Why not wait for more of a recovery to be evident? You know, a lot of people saying this may be the bottom, it may not. Why don't you just wait till we see a little bit of a sustainable uptick and get in then and not worry about missing the very beginning?
Well, part of the challenge is that as investors, we're investing in the leading indicator. And by the time we wait for the economy to look to be noticeably good, the market will have moved fairly substantially. So that's the trick, is you've got to be ahead of it.
Paul Kedrosky, I want to ask you what you're looking at here, and I just want to throw something out on the table. We had terrible ADP jobs report, whatever that means. Sometimes they get it very wrong, sometimes they get it right. But we all know jobs are going to fall in the Friday report. On the other hand, Paul, the productivity report was absolutely spectacular. For non-financial companies, productivity is growing at 3.5%. Unit labor costs are plunging, energy costs are plunging, and unit profits were up big in the third quarter. Now, I know this is the fourth quarter, not the third quarter, but the productivity trend has not been broken despite this downturn.
Yeah, I mean, there's no question the productivity numbers look really good and actually have looked surprisingly strong throughout all of this. I have to say, however, Larry, I mean, I got to differ with you a little bit on the oil front, though. I think, you know, while obviously this has been a great tax cut for people de facto, I still think a year and a half from now, as we kind of synchronize, come out of this downturn, we're going to be surprised with how fast prices start trending back up. So we should enjoy this period of a relative.
But that's a year and a half from now, Paul. I mean, that's way down the road. We can use the tax cut in the meantime. I mean, a year and a half, as the last year and a half has proven, is an eternity.
I mean, I got to get to the next minute and a half.
Oh, I agree. But you know, here's the thing: is the challenge is going to be and I think we're going to start hearing chatter about this eventually, is this kind of double dip idea that we come out of this, immediately see inflation ratchet back up, and see the economy begin to weaken again as rates come up. And that's what my concern is. And I think investors are going to start looking through to that eventually.
Yeah, Michael, we're obviously expecting a really bad number on Friday. I'm a little worried about what the market's going to do on that. What are you betting?
Well, certainly tomorrow's number looks like it is going to be on the weak side. If you looked at the weekly jobs claims over the past few weeks or so, it certainly suggests we're going to get a pretty bad number tomorrow. And I think the big question is how the market reacts to that is probably the more important question. In terms of the overall economy.
And what's the answer? I mean, what's the answer? That's what I'm asking, is how do you think the market's going to react to it?
Well, I think it's impossible to predict. I think, you know, we are concerned about a number of factors right now. Financial institutions are deleveraging. Consumers are deleveraging. If you look at household debt to consumer disposable income, it's at 130%. So consumer spending is likely to be weak over the near term. I think we continue to need a solution for the housing market. I think we can continue to need to provide aid for the automakers so we don't lose another 2 million jobs or so. Having said that, I think the foundation is starting to be laid for an economic recovery over the next 6 to 12 months. And what you're seeing now in the market is the possibility that we're in the early stages of some stabilization or a bottoming.
Well, why are you a bear then?
Let's go down this road. Do you want, Jim Moffitt, do you want a bailout of Detroit? This is a tricky one, and I ask this of everybody. Is a Detroit bailout bullish or bearish for stocks relative to a bankruptcy principle, a bankruptcy proceeding, a prepackaged bankruptcy? There was a great story, op-ed in the Wall Street Journal today by University of Chicago professors who said, look, we got to go back to first principles of the marketplace, and bankruptcy is a valuable business tool. What's your take on this GM story? How does this impact the stock market?
I think GM's story is it's too big. The effect, if it does go bankrupt, would be disastrous.
But differentiate between Chapter 11 and Chapter 7, because when people talk about this being devastating and all the jobs going away, I mean, we're talking about liquidation. What we're talking about is a prepackaged bankruptcy where the workers are still working. They're just taking, you know, much lower wage. They're getting rid of the legacy costs, right?
Right, and I think Chapter 11 needs a little bit of rebranding to bring some marketing in here. I mean, the problem is the two of Chapter 11 and Chapter 7 have largely gotten conflated in the popular mindset. And so as a result, as soon as we say bankruptcy, everybody thinks, oh, that's it, liquidation. That's right. And obviously that's not the case.
That's a good point. That's a good point. Let's rebrand Chapter 11. Why didn't these banks use Chapter 11? Seriously. Instead of being in the government payroll, which I hate, Uncle Sam's going to run a bunch of banks probably as well as they run the post office. Why didn't we put Citibank into Chapter 11? Or why didn't we put Lehman Brothers into Chapter 11?
I think it's a good question, and we tried it once, Lehman, and then convinced ourselves it was the wrong idea. I think the challenge is that we've convinced ourselves it's so much more complex than we ever knew, that who knew what the consequences would be, so we can't do it, which was a mistake.
Hang on,
we got to leave it there.
Right, we got so much to talk about.